So I'll wait for some people to come in. There's probably people in the stream now, but can you see on the eyeball on the top of the screen, like above my head, right above my head? Do you see like an eyeball, like it's with a zero next to it?
I see live in 40 seconds.
But next to the live, do you see anything?
No.
You don't, because for me, next to live, it says number of people in the stream 5. You don't see that?
I don't have that.
Okay. Everybody, thanks for joining. So we have Mark from Stockaholics. That's his YouTube channel, and he mainly focuses on the shipping industry, tankers in particular. And I usually, well, in the beginning, not as much anymore, but I used to watch videos of other YouTubers to try to get ideas, and I found 99% of the time, I got no information, and I think it made, I don't want to say it detracted from my views, but I just never got much value from pretty much almost every YouTuber. And I'm not saying anything bad about them. I'm just saying like what they said, I didn't learn from. But I learned the most from Mark's channel because I didn't really know that much about shipping. I just did my basic format of my videos, and then I watched his, and I just learned so much about the industry, and it really opened up my eyes, and it made my videos better, at least on the shipping videos. So if you want to know about either dry bulk shipping, like shipping iron ore, or tanker shipping oil and gas, about those companies, definitely go to Mark's channel. So Mark, do you want to just do an introduction?
Yeah. Hey, I'm Mark. I have the YouTube channel Stockaholics. Yeah, like a lot of what Scott was saying, I guess that's what I've been gravitating towards. I've been talking a lot about shipping, at least lately. That wasn't, I guess, the original idea, but yeah, that's what I've been doing. Yeah, thanks for having me on today. By the way, Scott, when he's been doing, at least the stuff that I've been seeing, when he's been reviewing the shipping companies, he's been doing a great job, at least on the high level stuff. I'm actually really impressed. He's been breaking down a lot of the stuff that I spend a lot of time to try and make a bunch of videos on. He does it in like a 5-minute span. I find that incredible.
Yeah, because I was talking to Mark just a few minutes ago before we started the stream, that I cover every industry. So I can't really get into too much detail. I try to get into as much detail as I can, but I can't spend hours and hours on a particular industry. But that's what Mark does on the shipping industry. He really gets into the details. And that's pretty much almost every video, I think, is shipping, right? Or do you do anything else?
So I made some videos on some. I basically, the idea was, okay, so the reason I started the channel in the first place, I think, the reason I wanted to, is because I wanted to talk about businesses in ways that I didn't really hear a lot of people talking about. So, you can watch videos on YouTube, and they'll basically, they'll go through the company presentation, or they'll read a balance sheet. And I didn't get a feel for, what the business was all about. And if you really understand a business, there's a lot more to it than just all those things. And in my view, if you're going to be successful in investing, you really need to understand what it is that you're investing in. Yeah. But I guess that was why I started the videos. And I've been mostly talked about shipping because I think that's what a lot of people were interested in. But I make some videos now and then on companies that I'm really interested in.
Yeah, it's true, because I talk about the financials because I understand it, but there's so much more, and I think financials are extremely important. But if you don't realize, like, maybe a certain industry is going to be obsolete, I mean, at one point, if you were investing in a company that manufactured VCRs, if you weren't aware about
the DVD player,
DVDs, or you may, I mean, that's more of a obvious example, but at the time it's obviously a slow gradual to where DVDs took over VCRs, but
Yeah.
with any industry is pretty much slow gradual. But if you can have the foresight and see those things, so learning about the companies, and you can't learn about every company. So I talk about every company, but I have to keep it somewhat high level. So you can't learn super detail about every company because you just don't have the time. But if you can do it about one or two industries, that could really make you exhausted me for questions in prior lives. Had a good. I'm bullish on Rig. So Rig. Mark, you want to talk about Rig?
Rig. No, I don't know what the company is, but I can look it up.
Transocean. It's a oil tanker company, right?
No, it's a offshore drilling contractor.
Yeah. I showed you. which you don't do.
I do own oil companies. I have, but I tend to stay lower on the I guess you'd say the cost curve for oil producers. So I'd imagine Rig, if it's a deep shore oil driller, it would be much further out the cost curve. So if oil goes really high, they'd probably do tremendously well. But if oil stays low, if they're further out on that cost curve, they probably won't. So I guess that's my first thoughts on looking at this guy. Yeah. If you look at their stock price history, that they did really well from 2003 to 2008, I guess, when oil went super, super high, right?
I did a couple of videos on Rig. Let me share my screen about the. Okay, so Mark, so we could talk about any company, obviously, but since we have an expert in the shipping industry, we should probably focus on these. So I did a video on Castor Maritime recently. Synergy, Tops, Nordic. These are companies Mark is probably really familiar with. So Castor, let me pull up CTRM. So I tried to, from watching Mark's videos, I try to summarize, because I do that my initial opening, and I try to talk about the company. And sometimes I get into more detail than other companies, because some companies it's just obvious what they do. Like, what company is obvious what they do? Like Apple. Like we know what I guess.
Oh, there's something that everybody already knows, like Target, right? Everybody knows what Target does.
Yeah. I guess like Amazon, we know what they do because we use it all the time.
Mm-hmm.
It's but like these shipping companies, I guess we know what they do too. They just ship things back and forth, but the nuances, I guess, of that. What the interesting thing is, what I learned I learned a lot, but the thing I learned the most that really opened up my eyes is the supply and demand. I didn't realize how important it was because the more ships that are available in the market, like the more capacity that can be moved, that means there's more supply, more supply of ships. And then if demand for products to be shipped isn't increasing, then the rates will go down. But if ships start getting old and get scrapped, then supply is low of the ships, and then the prices could get much higher. Did I say that right? Or
yeah, it's cyclical, right? But that's basically I think that's the simplest way you can think about it. It's just supply and demand. When you're thinking about an investment in shipping, a lot of people get really attracted to at least what I've noticed is they get really attracted to these companies when they have really good cash flows. I think, as human beings, we have herd mentality, and we see these. Everybody gets excited about it. There's a news story on CNN. Especially like with container ships, you've seen over the last year. There's lots of news stories, and people say, "Hey, these guys are making lots of money. We should buy this company and invest in it." But if you're thinking about cyclicals, that's usually not going to be the time that you'd want to buy. Now, these conditions that lead to these companies making lots of money can persist. And I've been one of the guys who've been saying, I don't think that a container ship company's investment is a great idea right now, because at any point the market's going to turn, and there's a lot of ships that are coming in the next couple of years from the container ships, right? So yeah, there's conditions that lead to really high earnings, and then those don't last forever. And then there's supply comes online. Usually the supply exceeds the demand for the transport of those goods. Rates plummet, and as a result, the company's share prices usually plummet too, right? So the time you really want to be interested in purchasing a shipping company is when nobody's talking about it, when there's a ton of pessimism, when things look really bad, they're losing a lot of money, and those conditions lead to those companies being bearish on their industry themselves. A lot of times, they send boats to the scrapyard, and then ultimately supply and demand corrects, and it leads to another period when they can make a lot of money. Yeah, and share prices go up. Cyclicals, yeah.
It's always supply and demand, and then if people don't get that concept, they're never going to make money. The same thing with stocks. Having a picture, I think this may help a little more. So as you can see, this is the Baltic Dry Index. This is the average the average rates shipping companies charge to ship dry bulk like iron ore. So obviously, we want to invest in shipping companies when the rates are high, right? Because they're bringing in more revenue per voyage, and then it could pass more of that off to the investors in the form of dividends, or maybe higher growth by acquiring more ships or whatever. But how do you know when the rates are high, right?
No, it's the reverse. You want to buy them when it's low.
Exactly. So you don't want to wait. Like, yeah, you would ideally get it around here.
Right.
I mean, you don't want, if you
But
got
you don't
it here,
know.
you'd have.
The thing is, you don't know when it's going to turn. You just know that it will, right?
If you looked at, if you had if you could go back in time, this would be a good time to hold it, because you wouldn't have to wait so long. Because even if you knew rates are going to go up and you bought it here, not many people are willing to sit on an investment for like 4 years.
Yeah.
But if it takes a few months to go up, you might have held it. But exactly, you don't know. But you have to first you have to identify, why would rates go up? And we know it's supply and demand of the ships, but also, especially with shipping iron ore, the main thing that forces that demand for iron ore is real estate in China. They consume more iron ore than anywhere in the world by far. So
Yeah,
you have to identify certain.
They're like 70% or something.
Yeah, it's the real estate in China uses more iron ore than anything else in the world. Any other country that uses iron ore for everything else within that country. And there's reasons why China uses so much iron ore. I don't know if anybody wants to get into that. I talk about it in my videos a little bit, but so there's just so many moving parts. Like, you have to identify the demand for these products. Then you have to figure out when there's going to be less ships in the market, so prices go up. And then things like COVID hits. So it's really hard to predict these things.
It's a trading game. That's the shipping. The business is, I guess, in cyclicals in general, you hear this a lot. They say it's inherently a bad business, but I mean, if you eke it out, if you averaged out the earnings throughout each of these cycles, like from when it was from the low to the high, it's nothing to write home about. But if you get it right and you're in at the right time and rates go from bad to good, you make a lot of money. Yeah.
When you invest in a commodity, like oil or copper, you have to realize there's they do go up over time, I guess, but there's no it's kind of like when you invest in a company like Apple or Microsoft, generally that really, really good companies go up over time because they keep growing and scaling. But when you invest in commodity, it could go decades without going up. It doesn't have to go up. So it's just a little more of a timing game when you invest in a commodity business, which is hard to do, which I don't like doing. Would you agree with that?
Yeah, I think so. Usually you want to buy them when nobody else wants to buy them. Nobody's talking about them. Like last year, I think what copper was $2 in the March lows, and the thing went to about 5. If you'd invested in copper when nobody was talking about it, and then nobody's going to get the actual 100% move correct. But if you'd invest from the low to the top, you would have made tremendous amount of money, because the stocks that use this commodity to generate their income, the amount of income they make from $2 to $5 a pound of that stuff is tremendous, right? If they produce that stuff.
It's and EVs. I know I've been talking about copper a lot and how EVs are going to really push copper demand so high and prices so high.
Mm-hmm.
I don't know, but
they use like 3 times as much copper per vehicle, right?
They use so much more. I think more. I think it's
more.
It's like I gotta pull up.
I think it's like 80 pounds for a traditional combustion engine, and like 200, 300 for it depends. The hybrids have like twice as much. But the buses, I saw buses, they use a ton.
Yeah, you saw the same chart. Yeah. It depends if it's a hybrid or fully electric. Because if it's fully electric, it takes a lot more copper than a hybrid.
That's the thing about copper too. So there's a lot of anticipated demand for it in the future. But I think what a lot of people don't realize is the supply of this stuff is getting, at least the high quality grade of the copper keeps going down and down and down over time. So there's going to be a point where if all of the anticipation around EV vehicles is true and the market explodes for EVs, and there's a lot of signs that it is. If that happens, some point there's not going to, the copper price is going to have to go way up for it to incentivize these miners to go and produce more of this stuff at a lot lower grades.
It's true. It's kind of like when we talked about is that chart? Can everybody see that?
There you go.
So ICE, internal combustion engines, 48 pound copper, hybrid. So you're right. You said 4 times, right?
I think you said 3. Pretty close.
Okay. Yeah. Yeah. I guess I was thinking of So 4. Yeah. So. And
that doesn't show the bus.
The bus was the one that was huge. But even if it's double, it doesn't seem like a ton. But there's so many cars that are made. Like there's just the supply of cars it's enormous, right? So that's a huge jump when you double. Even if it was double, like not even quadruple, which if we started to do pure EVs, it'd be quadruple. But even double, if you're doubling the demand for copper, that's huge. And
there's not enough supply right now to do that. You'd have to.
And that's the problem.
Would have to go way up. Yeah.
And also the infrastructure for charging EVs, like the battery charging stations, they use an enormous amount of copper. and the wind farms and all these kind of solar panels. If you see how much copper all of these things use, it's enormous. Like I think a wind farm is like 8 million pounds of copper, something like that. It was just but the thing is, there's not like wind farms. There's not like the number of cars is just like ridiculously high. A number of cars are produced. There's not that many wind farms produced a year. So even, but the cars is going to be the big reason. I think copper will be sky high. But it's really a timing game, because once prices get high, like once rates get high, shipping rates, so that shipping companies make tons of money when rates get really high. But what happens when rates get high with any market, right? There's competition comes in, right? New companies start popping up because they're seeing all these shipping companies making tons of money. And then also, if you're a shipping company, if you have, say, 10 vessels that you use to ship, and you're making tons of money in each vessel because rates are so high, what do? You buy more vessels, right? Because you want to keep growing.
Shoot themselves in the foot every time.
And then what happens when new competition comes in and the current shipping companies are adding ships? Now you have so much supply of ships in the market. And then everybody knows the supply demand curve, right? What happens when supply starts going up so much? Then prices come down, right? So it's kind of like it's a really interesting like situation when you look at deep, like the way Mark does in this industry. So you have to kind of like long the stocks when you got to long it here and then short it when it's up here. But how do you know, right? There's no way to know. Do you keep record on your channel?
It's a timing game, and the thing is, you're gonna get it wrong sometimes too, right? Like, let's say you think it's cheap when you're buying in, I don't know, 2019, and it goes down, and that can happen. It can happen for a while. So one of the things I notice a lot, at least on my channel, when I go and look at some of these people and I investigate them on Twitter, or talk to them a little bit, they just put way too much money in these, like in cyclicals in general. In my view, you don't want to put too much money in any given time, because no matter how good you think you are, no matter how much you think you know in the cyclical space or that industry, there's a chance you're going to get it wrong. And it's not about getting it right every time. It's about when you do get it right, that it makes up for all of the times you get it wrong and then some.
It's so true. It's kind of like that guy when Michael Burry was shorting Tesla. He may be right, but he obviously timed it, and he's not. Tesla hasn't dropped. It may drop, but he just lost so much money. I'm sure he can afford it.
Yeah. Eventually he'll be right, but it's too early, right?
If it does drop, I mean, it might not drop.
Okay. My view is that it will. I'm on Burry's side. It's too expensive.
Yeah. It will. But I'm just saying, like, that's it. And it's kind of like if anybody plays options, it's the same thing. Like if you time it right, you can make a boatload of money. But if you're off by just a day, you can lose it all. That's kind of like commodities. It's like that every day with commodities. Like it's either I'm not going to say you're going to lose 100%, but like even in this case, like you could have the stock was well over $10. You see, in the beginning of the year, and now it lost 90%, and that's only a year.
What company is this?
Castor Maritime, the company we're looking at.
Mm-hmm.
And these shipping companies, they do so many reverse stock splits. It extremely dilutes.
That's the thing. That's why, like, that's another thing you notice with a lot of these shipping guys is like they have this the way I see it, a lot of them have this fantasy where they want to be like a shipping baron. They just go and they try and expand their company more and more and more and more and more, and they do that almost at any expense, right? So when the market is bad, the way that they keep their company afloat is that they dilute shareholders and they raise equity a lot of times, right? Or they raise debt, they get more debt. And when times are good, they go and buy more ships. Right? So,
Right.
but there is some companies out there. There is some good shipping companies out there, but a lot of them are the way that I described. So if you're really thinking about investing in this space, you really need to you want to be investing in a company that has management that understands the cycles, who doesn't have this fantasy that I described, and hopefully has some stake in the game, some skin in it as
Right.
well.
Mark, I was referring to they do a lot of reverse stock splits.
They do,
which aren't, they don't dilute you, but in when they do it, they don't dilute you. Like when a company issues shares, that's dilutive, or
those are two different events. Yeah,
adding debt is kind of dilutive in a way because it's in it. You have to pay more interest. Reverse stock splits is just when you keep doing them to avoid getting delisted. It's like if you own $10,000 of that stock, in 5 years it's worth $1 because of all the reverse stock splits. I don't know if anybody ever looked at the chart for some of these companies when it looks like the stock was trading at over $1 million at one point.
Tops, I think Tops is one. What's one of the ones you made a video on? Was it like $4 trillion market cap for Tops? Bigger than the entire economy of, I don't know, what, New Hampshire?
It couldn't have been a market cap, but you mean the stock price?
The stock price. Is it for all the reverse splits they did?
You're right. It's $4 trillion. Here's Tops.
A lot of landmines in shipping. You gotta try and avoid some of those.
So this is Tops. Oh boy, can't. So it was actually trading. Yeah, good memory. Wow. It appears it was trading at over $3 trillion a share at one point, and then it's come down in price to $1. Which, if you ever look at stock charts, and I don't think people realize this because I see this all the time on like Facebook groups, like, oh, this company was trading at $50,000 a share, and now they're $5. So I bought a ton of stock because there's so much potential. But they don't realize it was never trading at 50,000.
For me, if a chart looks like that, I can't do it. It doesn't matter what the company's done. If they've completely changed the management, if they've completely done something, they've just blown it too hard. It's just too risky for me to get into these. That's my view. You have thoughts on that?
It's because of reverse stock splits. This is why this happens. Oh, they actually list them here. Look, it's just
5 for 1. Yeah.
How do you know it's 5 for 1?
See 5, or am I making that up?
No,
small.
No. It's just an S.
Okay. Oh, okay. Never mind.
They were paying a dividend. I like that. It shows that's just ridiculous. If you do even one reverse stock split, I mean, theoretically, this could be a forward split because I don't know if you can tell, but they're not forward splits. They're probably all reverse stock splits. That's crazy. Look how many reverse stock splits. That's generally a bad sign when a company does reverse stock split. It's a sign of distress. It's just a way to keep you above $1 a share so you don't get delisted.
That chart is actually really interesting because you know how you mentioned the dividends. One of the things you notice in a lot of cyclicals when they go through these boom periods is a lot of them tend to list. That's when they list, right at near the peak of a market. And they see that in a lot of these shipping companies. So that period from 2003, 2008, where a lot of commodities were going to the roof, and a lot of shipping companies were doing amazing at the time. There's huge demand from China. Actually, I read somewhere that there's like a theory that a lot of the reason for that is because George Bush invaded Iraq, and it kind of distressed a lot of the supply chains and stuff, and it took years for that to kind of rectify. I don't know how much that has a lot to it. Usually, the conventional thoughts around that is that it's
That's why
there was just China was just growing so much, and Russia, India, Brazil, right? And there just wasn't enough ships for whatever reason to deliver it. So they had this tremendous earnings for a period of time there. And that's when I see these dividends here. I mean, that shows you where that money was going to. They're paying out dividends, right? But this is they produce during these boom periods. You get a lot of weak companies. You get a lot of managements that don't necessarily know what they're doing. Maybe they have poor strategies that do well when the market's doing really well, but when you go into this distressed period, they do tremendously poor, right? This company should be bankrupt. This company should not exist, in my opinion.
Yeah, no, it's not. What's your thoughts on CPLP, Capital Product Partners? Are you familiar?
Yeah, I just looked them up a little bit. They're kind of like a mix between container ships and some other segments. Yeah, it looks like mostly containers. So a lot of people don't like it when I say this, but I'm not tremendously bullish on container ship companies. There's a unique set of circumstances that have led to these container ships over the last couple of years earning a lot of money. Yeah. And I don't like to invest in container ship companies or any cyclical when they're making tons of money.
Well, yeah, that's actually, when you avoid them.
It's weird. But this is such a really cool time to be observing and learning about shipping and in general, just because there's just so many issues going on with COVID and all of the dynamics with all these lockdowns, and then with all of I don't know if this is going to continue. That seems like it's slowly shifting, but there was a period of time when the governments are just throwing money at people, so they couldn't do anything with the money. They're just going clicking buttons on Amazon, buying new stuff with the stimulus money and the unemployment benefits. So that led to this huge demand spike, right? So it's my view those conditions are slowly going to change over time, unless governments keep pumping more and more stimulus into the economy and the world economy. A lot of that's from the United States, but
yeah,
it's really hard to imagine that the demand for all of these container goods is going to stay there, right? It's the way I see container ship right now is like a traffic jam, right? So I don't know if you guys, everybody's probably been in a traffic jam, right? If you, somebody in the front of 1,000 cars in front of you hits on the brakes, it kind of you kind of have this like butterfly effect where it slows down all of the cars for miles and miles and miles, right? That's kind of how I see container ships right now. There's this huge demand spike for all of these containers, and then we've also got these unique situations with lockdowns and mandates and all of this stuff, and issues where these shipping companies can't get the goods from point A to point B. So it really, if you're investing in a container ship company, or at least one that is heavily involved in container ships, you're betting on this condition continuing and longer and longer and longer. And for me, it's really hard for me to do that. At any point, the clogs the traffic jam can end. And
yeah, nothing lasts forever.
Yeah.
Maxwell brought up a good point that I noticed too, that pretty much all these tanker companies trade well below book. Let's see Castor Maritime. They're trading, their price to book is 0.6. So that means if you liquidated the company, each shareholder would get $3.47 while the stock is trading at $2. So they're worth more in liquidation because of the vessels. Yeah. So, but I don't think they could get that $3.47 if they did liquidate. But
if they liquidated all the ships, there'd probably be too much pressure on the shipping price, the price of the ships. Yeah, so they'd have to sell lower. But
yeah, as they sell more and more ships,
yeah,
they would get
it
less
reduces
per
the
ship.
price, right?
But yeah, but that is an interesting thing when you see that trading well below book. So you think, wow, this is a pretty safe investment. But yeah, like Mark said, and I talked about this about companies when they want to sell. Hey Ben, what's up? When they want to sell stock into the market, if they want to sell like say $1 billion of stock, if they do it all at once, maybe the first 100 million shares, like the first 10%, they'll get a lot more money per share than the last 100 million shares they sell. Because as they sell into the market, the price goes down a lot. So they want to kind of spread it out. If they need to sell $1 billion, they want to sell maybe 50 million a week because
that is kind of sad though. Yeah, the market is discounting the company so much they think it has the management or whatever has a negative return on the assets. It's trading. That's one way I kind of look at it. Yeah,
it is, right. It's like, because when a company acquires another company, it's almost always, it pretty much has to be above book value. Doesn't have to be, but it's almost always above book value. So that's how goodwill comes about on the balance sheet. Is then if this company is worth $328 million according to its balance sheet, equity is assets minus liability. So the book value is $328 million. If somebody wanted to acquire Castor Maritime and they paid $400 million, then they would have to book $72 million as goodwill, the price they pay above the book value. So yeah, it's just crazy that. So if you buy this stock, right, you're paying below book value. So you don't even have to pay a premium. While a company, like a big company, if they wanted to acquire this company, they would have to pay more than $2 a share. Which kind of like makes your head spin. I don't know if people follow me on this one, but like, how does that even make sense?
Actually, that's one of the things about shipping too, is if you see that it's trading at a premium to book, or one of the things they talk about in shipping is like net asset value. If it's trading at a premium to those assets, usually that's a sell signal for whatever reason.
So this is a sell signal.
No. Usually if it's above book, usually if it's trading at a premium to the net assets or to the book, right? They're similar.
Almost every company is. Like Alibaba, their price to book is 2.3. So almost every company is above 1. It's very rare.
Even that seems low for Alibaba, yeah.
That's real low because their stock price has been cut 60%. And this video was done last week. It's dropped even more, like probably 20% since I did this video. But yeah, but almost every company, this is Abcelera, 4.1 price to book. Okay, let's go back to the questions. Hi. So somebody has a question about Turkey. I lived in Turkey.
Turkeys. No, not really. Sorry. Just shipping in general, I guess.
I know that the Greek shipping companies are common.
They are, yeah. And one, I don't know if I should say this, but one of the things they have in common is they usually don't do that good. One of those is that Tops company, yeah. I don't know why. It's just one pattern I noticed.
What was that about Tops?
Tops is one of those Greek shipping companies, yeah.
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 It's I don't know. I mean, it seems just like people question, like, is this even a real company? This is so shady, and I don't disagree with them. Like, I kind of see where they're coming from. Like, I think it's a real company that does real shipping, but I kind of see where they're coming from. Like, it just seems so odd, like the stuff they do, like these huge reverse stock splits. They're losing so much money. Like, it's almost like, how could a company operate like this? But
yeah, I kind of wonder how people keep giving them money. I don't get it for some of those.
They're chasing like they want to win the lotto, so they see these stocks that are so low compared to, because a lot of people, not people watching this channel right now, but most people, the way they value stocks is they look at the stock price in the past and they say the stock was trading at $150 last year, now it's $100, this is a good buy. Or if they look in the past, the stock was trading at $50, now it's $100, they may not think it's a good buy. So that's how a lot of people value stocks. But that's not a good way, because obviously the past is not indicative of the future. And also, when we look at this company that was trading at $4 trillion a share, this must be the greatest stock in the world if it was trading at $4 trillion a share, or $3 trillion. But obviously, we know that's not the case. How about the general giant U.S. companies, FedEx, UPS? Let's talk about Waiter. Somebody asked about Waiter. Yeah, I've been really kind of like conservative with my investing, and then I kind of like got a little loose and invested in this company, Waiter, and now I'm regretting it. I'm like, I should have just stuck with my. It's down so much, but I was getting tired of people saying you don't invest anything risky. It's all safe index funds. And let me share the screen, Waiter. But I invested a lot in this company. I did think it was a good value when I bought it. I did a video on it. It was trading at 80 cents. So I thought it was a great value at 80 cents. And then when I went to buy it, right before I bought it, Morgan Stanley bought it and drove the price up to and I got it at $1.19. But then it was up. Yeah, it was up to $2 at one point. So I was up like 70%, 80%. Now I'm down. So, but I'm not selling it. It's super risky. If you invest in a company with under 1 billion market cap, you have to understand there's a decent chance you may lose a lot.
Hello, can you hear me? Oh, you're muted, Scott.
Okay, so I was muted. I didn't realize. Oh, so Mark, what's your portfolio like? What are you invested in?
I have some shipping companies. I have a company I like, OTC markets. That's about 20%. I have like 10 different companies. I could go through some of them. You want to know all of them?
No, whatever you want to tell us.
Actually, that's one of my favorite companies is OTC markets.
OTC. Mm-hmm. The exchange?
Yeah, it's the OTC markets group. They're kind of like they're not really an exchange. They just they allow. They're not. So there's a lot of people would say that they're similar to like the Nasdaq or like S&P. But it's a private company. And okay, you ever seen like the Wolf of Wall Street or whatever?
Yeah.
I guess there's one part in the movie where he gets fired from Wall Street and he goes and he works for the shady guys who sell people pink sheets, right?
Yeah.
There you go. But that's not all they do. They have pink market listings, but they also have companies that are not so shady, and then they have actual full-fledged legitimate companies that they trade with, like Heineken, stuff like that. That just for whatever reason don't want to list in the United States, so they allow them to trade over the counter. So they're basically like the guys that do over the counter securities, and I really like OTC stocks. And I looked at this company, and they have a huge moat. They have a tremendous balance sheet, and they 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 have awesome management. They got high insider ownership. It's just all the check marks for a great company in this. And it's my view that you're going to see more and more speculations in the market over time, and in my view, long-term interest rates are going to go to the zero bound,
Right.
and as that happens, it pushes more and more people out the risk curve. If U.S. equities are super expensive, like a lot of them are, then a lot of people want to invest in overseas companies, and this is the company to do that with, OTC markets.
Yeah, it's some companies trade OTC because it's cheaper than trading on a major exchange. Also, there's less stringent reporting requirements. So
actually, that's their moat. Their moat is the regulations. They have specific compliance data they sell between all of the brokers and stuff that they list the OTC stocks on. But you're right. That's why a lot of companies don't want to list with. Sorry to interrupt. Sorry.
Yeah. No.
Yeah.
And some companies don't meet because you have to have a certain. I forget it because it changes. Well, you have to have a certain market cap, and you have to be a certain size to trade on a major exchange. And sometimes you can't. Like cannabis stocks at one point weren't allowed. I'm not sure if they're still allowed. I think they're allowed now. Certain stocks are not allowed to trade in major exchanges. ADRs are often traded OTC, like foreign companies. So the negative of trading OTC is that there's less liquidity. There's less people that buy OTC stocks. So it's kind of like marketing. There's less people who will see the stock, and when there's less people who buy your stock, then the stock price generally doesn't appreciate as much as if it's traded on the NASDAQ. But Mark, what are some other reasons people trade OTC?
Just to get access to foreign markets, right? Like there's a conception that a lot of over-the-counter stocks are kind of scummy, and some of that is true. Like a lot of them are, but a lot of them aren't. So that's why this company has these different kind of listing tiers, is different financial reporting standards, and they make money as these guys apply and get into those different tiers. They also make money selling market data, the regulation stuff, to all of the brokers who list all of these companies or trade with those. Right? So like Fidelity, if Fidelity does OTC stocks, they have a lot of those that people want to buy. Then they have to get a subscription to OTCM, and as more and more people are interested in this space, they make more and more money. Yeah. Sorry, did I answer your question? What was your question?
I didn't really have a question. Just kind of like, just because I think people wanted to have. Well, some people are asking specifically about this stock.
Mm-hmm.
This stock overseas, like they receive the fees from OTC stocks. Is that where the revenue comes from?
When the companies list with them through the OTC network, then they charge them a fee, and there's like a listing fee. I'm not sure if that's 100% recurring, but I'm sure that there's some small recurring thing just for them to stay active with them. But
Right.
most of their revenue comes through brokers. So like if there's Fidelity or there's Robinhood or whatever, where people want to buy OTC stocks. There's compliance data that they have to get through this company that they charge them for. It's like a subscription, and it's a lot. They make a lot of money doing that.
Well, 94 million in the trailing 12 months, the revenue. There is less regulation, so there is a chance you're going to run into a company that's a little more shady trading OTC than trading on NASDAQ.
That's why they have those distinctions and the tiers with the companies when they list with them. There's different financial reporting standards for the different the different tiers that they offer on the OTC.
Right. I'm not saying it's likely that you're going to run into a shady company, but because these are still pretty big companies, a lot bigger than the store down the block from you that just a single owner owns.
I don't think Heineken is a shady company. I think Heineken's awesome. Right? There's some good companies on there. Yeah.
No, I'm saying it's not likely you'll find a shady company, but it's probably a little more likely on OTC because there's less regulation.
For sure.
But
if you're looking at the pink sheets, there's a lot. There's some weird companies in there. So if you're trying to avoid getting scammed, don't invest in the pink ones with the low reporting standards.
Right. The pink sheets. I live in a tent. Well, the good thing about these exchange stocks is that it's a really high margin business because it's just collecting fees. They
have insane operating margin or whatever. It's like 80% or something average. Does it show it on there?
Well, the operating margin, it's pretty high, like 40%.
Oh, okay. Made 30%.
That up. But they're
or is it return on assets? Maybe I was thinking of return on assets or something. Sounds just crazy.
Like I was looking at the royalty trusts, like their margins are like 80% because they just collect royalties. They're not operating anything. There's no like overhead. There's just like a few people working there. Mm-hmm. That doesn't mean it's a great investment. There's less potential, but like they don't need debt. They have no debt.
They've been paying dividends. They have special dividends because they just make so much money, don't know what to do with it, and they grow. So
it's it's a good. It seems like a good, and the stock has appreciated a lot.
There is some probably some cyclicality in the just the amount of people that are interested in the stock market at a given time, right? So if they go through a recession, they'll probably lose some of that income, right? There'll be less people interested in OTC or listing because there's less people interested in the stock market at the time, yeah.
Right, exactly. And I think it'll keep growing as it's easier for people to access the market. Like every year, it's just like more people have access. Like I remember when I started trading, there was the first stock I ever bought, there was no internet. There was an internet, but there was no broker online to buy through. I was in high school. I was starting college, and I interned at an investment bank. So I had to fill out a form and send it to the trading desk, which was on another floor, to buy a stock. And then they would interoffice me back a confirmation. So that's how I bought my first stock. But then when E-Trade, I remember in '99 when I got an E-Trade account, it grew a lot at the market, number of people when online brokers came out. And now it's even more with Robinhood. So if you want to buy stocks, just get in the market. It seems like there's so much upside potential. Matt said he scoured every OTC. That's a lot of companies to scour. 5,000.
That's my
And
goal
most of
too.
them,
I'm on like letter F.
PRKA is example. The only thing I don't like about OTCs or penny stocks is there's sometimes, unless it's like a stock that for some reason everybody's talking about, but most penny stocks nobody talks about, and the stock doesn't move. It doesn't go anywhere. Leisure, consumer cyclical. It's a travel company or leisure. 13 million of revenue. That's pretty good. That's not bad. Mark, there's a stock, Forte Biosciences. It's killing me. I did a video on it. Oh, it keeps going down. Look at the market cap, 33 million.
Man, I avoid biomedicine, all that stuff. I don't get it, man. It's too hard.
No, but they announced like a month ago. They said the drug they're working on, the only drug they're working on, failed phase 2 clinical trials. So stock went down 95% from 30 to $2, right?
Yeah.
But they have the thing. They have more cash on the balance sheet than the company's worth. Like,
wow.
Look at it. They have 59 million cash. They have no debt either. Look, they have like hardly any liabilities. 2 million current liabilities. So even if you subtract that out, they still have like 55 million of cash. And then, so if you just give us the cash, that's more than the stock's worth.
So I think I've seen a company like that recently. Like when I was looking at shipbuilding, there's like Yangziang Shipbuilding in China. And they had, it was like a similar thing. They had more cash on the balance sheet than it was worth or something. I was like, what the? But it was in China, so I don't know how. Like, I don't know.
But if it's an active business, because the burn rate, like if they're burning through like if this company was an active business, right, and they're not, they're kind of like in a sense a shell at this point because the only drug they're working on failed, and they said that's it. We don't have any more drugs. So if they were an active business, they'd be burning through, say, I don't know, $5 million a month to run the business. Then I would see there's risk because just because they have this much cash, in 4 or 5 months they might not have any cash left. But in that case, they have no more expenses. They're not even an active business. So I didn't see any downside. But so I bought the stock. I was up like, no, I think it down here. I did the video. I think around here, because I did the video and I said it was worth like $3, and then it went up to like almost that price, and now it's come all the way down. So I don't know.
Are they burning it, or what? Is it just sitting there?
Well, we don't know. I mean, we don't get updated. We don't know how much is in that bank until the quarter end. But as far as I know, that they don't really have any expenses. I'm sure there's some employee expenses, but like payroll, but it's pretty limited. The thing is, people are just selling off the stock. I'm not sure. It's like if a stock goes up 10% in a week or goes down 10% in a week, fundamentally nothing changed with the company. I mean, unless something huge happened, like they got a contract or something. But generally, most companies, if their stock goes up a ton in a week or down a ton in a week, Nothing happened with that company. It's just the market is fluctuating. So the market price and the intrinsic value of the company are two separate things. But the price the market's willing to pay is what dictates how much money you make, not what the company's worth. Unfortunately, I don't know. So maybe I called this one wrong. I did it as a test, really, because I was like, I never saw a situation this extreme. But I'll find out. If I have a feeling I'm going to lose a lot of money in this one, but Munger got burned with Alibaba. That's true. Buffett invested in airlines and lost a lot. So now,
Yeah, that's what I don't get, right? Because I remember hearing about that last year. Because isn't he normally like he looks for really good businesses, and it's like, why is he in airlines anyway?
right?
I don't get it.
Right.
Like airlines is another one of those
It's the
cyclical
worst.
businesses. They're worse, man.
They never make money over time. Like
Yeah.
they're just like
And then he
they
bought
have to.
gold, right? And he hates gold. It's weird.
Yeah, I know. I thought that too, right? I saw he bought like Barrick or something.
Yeah. Weird.
Maybe there's pressure to like.
He probably just has to buy something, yeah. This is like,
But they have
look,
so much
look, man, we
cash.
haven't bought anything in 6 months. We gotta make it look like we're doing something over here.
Bishop BRK's down. Oh, it's not. It's still over 400,000.
Actually, if Alibaba delists, I'll probably buy it. I'll buy it. Because like usually what happens when those things delist, they tank like really hard and they go like way, way, way below what anything is fair. Like I think somebody mentioned Luckin Coffee. I know that one rebounded tremendously, but it is a shady company. They were faking the numbers, right? But when that thing got delisted, there's huge panic and it oversold and then went up. I think it's up like 4 or 5 times since then, right?
Yeah, it's up a lot.
Yeah.
What?
And Baba's a good company, you know.
It's one of the best.
Yeah.
It's amazing. Well, I think remember JC Penney's, isn't that the one that delisted and then it went up like 1,000%? Or was that Kodak? No.
Oh,
was that
maybe Kodak? Kodak, when Trump said something, when you're right, and then shot up 1 billion% or something. They gave him a loan or something.
What company filed bankruptcy and then he tried to issue new shares?
Oh, Hertz. That's Hertz, right?
Hertz. That's it. Yeah, it went up like 1,000% after filed bankruptcy.
The initial bankruptcy offering.
This might not show it because this is since the new company. But yeah, it was down. It went down to like $1, and then within a month it was up to $10. And then they tried to issue shares, but the SEC blocked them because they were going through the bankruptcy process. That just shows you how irrational the market is.
That's all the stimulus money, man. People just stuck at home on.
And we lost Mark. Hope he comes back on. This would be a perfect question for him. How do you think about tankers? Ship supplies are lowered until 2024 because shipbuilders' order books are full. I think oil demand will go up. Well, let me talk about this one. We'll go back to this one when Mark comes back. Well, the Tesla thing, that was more recent since after they filed bankruptcy. But I'm talking about several months ago when they initially filed bankruptcy and then stock went up a ton. Everybody could hear me, right? It's just Mark got knocked off. Let me email him. hope he comes back. Here, what do you mean here? Actually, my bad. Worth like 400 million market cap for Munger. Yeah, Munger's stake in Alibaba is nothing compared to how much money he has. But it's still crazy that he put so much money into them and how bad they're doing. Okay.
Sorry about that.
Yep. Here's a good question about tankers. So do you see there's a backlog in ships?
This is, how do you think about tankers? I think ship supplies are very low. Right. That's one of the reasons I like actually the shipping in general right now. Now there's certain segments I think that are, going to be overvalued in the short term. I mentioned containers, right? But yeah, I think that that's why I was looking at that shipbuilding companies, because I think there's an underinvestment in shipbuilding. The ships since the 2003 to 2008 period, where there was a ton of ships being built, those are really old. And then there was an oversupply of those things being built. And since then, there was an overcapacity in these shipbuilders, right? So since then, the amount of shipbuilders has decreased by a lot. I think that there was like 800, I might be making, but it's down like 75%. There's the amount of shipbuilders out there. And what you're noticing recently with these container ship spike in rates and these guys going out and buying new ships, like they always do when they make a lot of money, the delivery times are increasing. And it's my view that they're going to keep increasing because there's an undersupply of the amount of actual people that can put boats on the water. So yeah, I think overall this is going to be a really good decade for shipping and tankers especially. Yeah, there's like very low amount of ships on the order book. They're getting older every year, and there's tighter and tighter environmental regulations. Eventually, they're going to get squeezed, and there's going to be another one of those 2003s or 2008s, in my opinion.
Yeah, once it gets squeezed, once some of these companies go bankrupt because for whatever happens in the economy, COVID and a second COVID, yeah.
The economy, the world economy, it doesn't stop growing. It keeps the seaborne demand for goods
keeps going up. It keeps growing.
Yeah.
But yeah, when something really bad happens in the industry, that's when you want to jump in. I mean, you don't want to jump into a company that's
too early
doing illegal stuff, but a good company that's just down a lot because of the market.
But
Bob,
oh, sorry. Go ahead.
No, what are you saying about Peter Lynch?
What Peter Lynch basically says, because he's one of those guys that actually talks about cyclicals, which you don't hear too often, is what he says is basically you want to invest in the companies when they're doing bad, but you want to see that there are signs that things are turning around. So in the case of tankers, one of the things that you're seeing turn around is you're seeing a lot of scrapping taking place, right? So these are conditions that will lead to good times in the future.
Yeah, and I try to talk about this when I do shipping videos, is that you want to try to identify a time when ships are getting really, really old, because there's going to be a lag between when ships get scrapped and new ships come on the market.
Right. It's that 3-4, but the window's increasing. There's that 3 or 4 year window where you can't do anything about supply, that you make a ton of money, right?
Yeah. If you could identify it, and there's so many moving parts, and people think like, oh, you know so much about financials, you understand a lot, but it's still it's complicated to identify, because you think, I thought so many times, I see where the market's going. It's so clear to me. now I'm going to make a ton of money, and then you're totally wrong, and then something changes. So it's really hard. So I just found the best strategy is just to find good companies and just hold them, and ride it out.
Yeah,
I don't
that's
think
great strategy.
I'm kind of annoyed.
Actually, that's pretty much what I do. Like, I like that OTC company. I bought it and I'm holding it. I'll probably hold that for 5-10 years at least.
If you like a company and you have faith in them, buy and hold. Don't.
Yeah.
And if you could ignore the market, not even look at it, which is hard to do, but
Especially
that's even better.
Especially after last week, yeah.
Yeah, I seriously, I've gone months without looking at my portfolio, because I don't really, I know I bought them. Now I'm looking at them more because I bought some of these small cap stocks, which I kind of regret, but it's a learning lesson. Yeah, I just like to buy and not think about it. I do sometimes see the stock price just from by accident, like seeing the stock price. But so I know where they are, but I don't really track them because I'm not going to sell them anyway. So, at least most stocks I buy. All stocks are present value, future cash flow. Might want to remember that. When they IPO, that's what they are, the present value of the future cash flows. But after they IPO and trade in the secondary market, they're almost never valued at that. Market forces, because you might have a company. Because how could you predict the future cash flows? Like, who's going to say what the future cash flows are? Nobody has a crystal ball. But would you buy Alibaba, Mark, now, or what is it, 110?
Yeah, I think it's a good buy. It's a great company. It's cheap.
Yeah, it's crazy.
That's what I said. If it gets delisted, I'll definitely buy it because I know it'll be undervalued for sure.
You mean if it trades OTC?
Yeah, if it goes OTC, it'll I'm guarantee the price will do like that Luckin Coffee. It'll go down $50. Be the cheapest company you could ever buy. That's that high quality, right?
It'll literally be worth. It'll trade below cash. That's a term. Like
amazing company like
Forte
Amazon, the Chinese Amazon. Yeah.
Right now they're like 70 billion cash, US dollars. And this is not just a regular company. This is one of the best companies I think ever. Is Alibaba. The amount of profits they have had and the growth, they're like probably one of the top 10 companies ever in terms of running a business. But they're in China. If they were in the US, it would easily be a $2 trillion company.
Yeah.
Because they're bigger than Alibaba. But if they were in the US, they wouldn't have access to the Chinese market like they do, I guess. That's why they're so big, because there's so many people in China.
Munger will eventually be right. I think it's going to grow, and eventually the share price will grow when a lot of the Chinese stuff settles down.
Yeah, I think he'll be right. But it's kind of nice if you buy it now and you get a much better deal than Munger.
Yeah.
And if he's right, you're going to be super right because you're going to make so much more than Munger. Value. If Munger is right, you're going to make a ton because you're going to get it at half of what he bought it at. Yeah, Alipay. They own Alipay. Like that's like so much. Like the amount of
right? Is another one, Ant Group. Is that them too, right? Alibaba.
Oh, Ant Group, yeah. They tried to IPO. Ant Group tried to IPO. Was it last year? And the Chinese government blocked them. and that would have been the biggest IPO ever at the time when they tried to IPO. Ant Group is like the parent company of Alipay. They own Alipay. Recently, Warburg Pincus, who owns part of Ant Group, they cut their value of the company, the valuation. So that's why Alibaba, another reason it went down is Ant Group's valuation got cut. Yeah, October 2020, they were going to IPO in the US, Alipay or Ant Group, and Chinese government said no. But look at in 2019, Alipay processed $17 trillion of payments. That's US dollars, and PayPal did 172 billion. That just shows you how big. Like, there's just so many people in China. This beats hanging out with my girlfriend hands down. I agree with that. How do you evaluate companies with negative free cash flow? Mark, did you mean to mute on purpose?
Yeah, there's some noise here. Just
okay. When you value a company like Alibaba, it's a million times easier because you have a lot of information, right? Nothing's, obviously there's no guarantee the stuff they did in the past they'll do in the future, but it's a lot easier when you have at least positive numbers. But if you have negative numbers, it's just really it's almost a pure guess. I mean, you have to use some kind of logic, and I try to use logic in all my videos and explain it. But it's a lot of guesswork. Let me see if I can find a video that I did with negative. Oh, they don't have negative though. Falcon Minerals. You could I mean, there's different ways to do it. Like, sometimes I look at the company's projections of what their future revenue projections are, and I sometimes try to find analyst projections, or I look at similar companies and see what their growth was, and try to apply it to the company I'm looking at. But the thing is, even if I'm spot on with my forecast, even if I get their, which is impossible, even if I forecast their revenue and free cash flows in the future exactly what they are, that doesn't mean that they're going to trade at intrinsic value, because the market, like Tesla, people are valuing so high, and it's obviously not $1 trillion company, but people are looking towards the future. They're not really looking towards what they're doing right now. Mark, what do you think of Nokia? Do you have
I don't know anything about it.
Opinion on no?
No.
I'm kind of interested in investing in them. I want to invest in.
I thought it was a meme stock. It's not. It's legit.
I think it's a great company.
Okay.
They're this is US dollars. Yeah, 25 billion of revenue. That's a lot of revenue. That's not like a 3 billion of free cash flow in trailing 12 months. I mean, if you look at these other meme stocks, they have like 100 million of revenue. Almost every cell phone has, because they have a lot of, they don't sell phones. They used to be the #1 phone company in the world.
I used to have the brick phone, the Nokia, the little gray ones.
They don't really make phones. They do through one of the subsidiaries, but they have a lot of patents that they license out to phone companies. So the technology in most phones is from Nokia. and they're at one point they accounted for 4% of Finland's GDP, the entire country, 4%, and they accounted for 21% of their total exports. Just one company.
That's crazy. Yeah.
The entire country.
So what do you like?
And their market cap was 70% of the entire Helsinki Stock Exchange. Of the entire exchange, they were 70% of it. That was in their peak in 2000. But they're still the largest Finnish company by far. Can you explain cost of equity? It's a little confusing, cost of equity, I agree. Cost of debt is very straightforward, right? And I thought about, because when you calculate the WACC, the discount rate, it's like you combine cost of debt and cost of equity to figure out what to discount the future cash flows by. And cost of equity, you can use the capital asset pricing model, which is what I use that as a base case. I'm sure you're familiar with the CAPM model, right? It applies the company's beta, and you can just look it up. It's just a simple formula. Let me see. You use the market cap and 30 minus 36, but you have to apply a growth rate, a market return to it. But it's really subjective, extremely subjective, because you have to think of what's like the cost of equity for like a company like AT&T should be fairly low, because it's not like a super risky company. It's fairly stable. But when you look at a cost of equity for like a junior miner, is just a company that's trying to find, like in the exploration process, they haven't identified any commodities at all. They're just looking for it. Then it's extremely high, the risk. But it's hard to like, it's really an estimate on how you feel the company's risk is. It's kind of, I could kind of spend a long time talking about it and we wouldn't really get anywhere. But yeah, ask me in the comments in one of the videos and I could kind of elaborate more. Nokia 5G is the hype for the stock. Isn't Alipay a part of Ant Group that got blocked by we just had that conversation. Sorry, not too familiar with what happened. Yeah, last year, Ant Group, who is the parent company of Alipay, tried to IPO in October 2020, and the Chinese government said no. So it would have been the largest IPO ever at the time, or even now, I think. But they weren't allowed to. So now they're just overseen by the China's central bank, which kind of sucks. Like if you grow a company like to a massive scale, right? And now you can kind of like tap into other countries, the liquidity in other countries. And what better country than the United States, which has one of the most successful countries? If you have that opportunity, and that means your company will grow more because you'll have more access to more capital, right? The US capital markets, in addition to China, but you're not allowed to. It's crazy, right? Like it's capitalism is not like a thing the Chinese government really cares about. It's more about keeping control of their country, not letting it doesn't make sense, but whatever. I believe that's the most pressured part of Alibaba, isn't it? Alipay. Yeah, that's probably pretty accurate. Alipay. Because Alipay it got cut. Its valuation got cut. It's a private company, so there's no like market value of Alipay, but the investment bank Warburg Pincus said valued at 200 billion. And if that's accurate, I think Alibaba's it went down since I did this video. So it's probably like 70% of Alibaba's market cap. Can everybody see that? Yeah. But on top of all the shenanigans, there's a delisting problem. So it's just, as soon as China. Do you guys want to know what my best investment was ever? I put that in the title. I invested $80,000 in a business 9.5 years ago. Don't you get shares if they delist? Yeah, you get shares if they delist. Your equity doesn't vanish. You just get shares probably in OTC.
Yeah, that's what'll happen. It'll be OTC traded. More business for OTC.
What's that?
I said more business for that company like OTC.
Yeah, that would be a huge win for your stock if Alibaba is part of it. I don't consider McDonald's and Coke sin stocks. I consider what I consider sin stocks or vice stocks is cannabis stocks and I guess
you never finished what your best investment was.
Yeah, I know. Because no one seemed interested, and I felt weird. Like,
okay,
okay,
I was interested.
Yeah. So I invested $80,000 into this business 9.5 years ago, and I got a 27x return. So I retired last week because of this investment. It's not a traditional investment. It took a lot of work. I'll pull up my Excel file. So now I could do YouTube all day. Or maybe if Ben's still here. So I turned 80,000 to 2.2 million. It took a lot of work. It wasn't like I bought a stock. I bought a business, a franchise, 9.5 years ago. It was a Mathnasium, a math tutoring franchise. So I didn't log in my November numbers yet, but exclusive of that, I profited 1.7 million in 9.5 years, and then I sold it for 470,000 last week. On November 30th, I sold it. So December 1st, I was technically retired. So 2.2 million, so 27x. So obviously it was my job. It wasn't like I just 80,000, then I got 2.2 million. I had to work for it. It was, but I don't know if it's going to be indefinitely, but at least definitely for at least 2-3 years, I'm not going to work potentially ever again, especially if I could grow my YouTube channel, which would be ideal, and not have to work.
Yeah. What made you buy a mathnasium?
Well, it was just because I worked in Manhattan. I worked on Wall Street for 13 years. But 2 years before I quit that, it was 2008. I started since 2012. So 2008 was the Great Recession, and there was a lot of mass layoffs at my company and most companies. So I was like, want to do something different. So I got my MBA the next 2 years just to have a backup plan in case, because I was going to start a business. I don't know. I just was trying to figure out what business to start, and then I found there was a Kumon, like a learning center. That's the largest tutoring center, Kumon tutoring franchise. So I looked into it, but I like math. Don't like English so much, and I saw Mathnasium as like when I looked at the website for the franchises, and I really liked it. Like I really like they're kind of like the teaching style. Is Ben here? Because he's one of my students now. He's a tutor. He usually comes on the stream. So I actually grew it to the second largest in the country at one point. But then after COVID hit, it was kind of frustrating. Like my revenue and profits went down dramatically, and I just kind of lost the passion, and it was kind of demoralizing. And someone just offered me. I wasn't really looking to sell it because I did enjoy it, but someone I thought was a good offer, so I just took it. But in my heyday, it was great. I was like making like 20,000-30,000 a month when things were going really well.
That's crazy. I didn't know there was that much money in tutoring. That's cool.
2000. Well, most businesses don't make that much money. At least most mathnasiums weren't that profitable, but I was like just real aggressive with trying to grow it.
What were some of the ways you got clients or put people to come to your mathnasium?
The best way by far, and I kind of learned this. I remember in college in the marketing course, is just market to your customers. So all the kids, just one franchise, not multiple, just one center. Yeah, the kids loved it. They loved coming to my center because there's so much rewards, and we used to go to like events. I took them to the Giants baseball game every summer. I would get 50 tickets. We would go to like we would do these game nights once a month, the last Friday of every month, game night, and kids would come in. I would order pizza. Domino's was next door, so order pizza, and the kids would play games. I'd have an Xbox there, so they just loved coming. So they would refer their friends, and it kind of just mostly organic growth. But I did a lot of marketing though. I spent a lot. Like you can see, like 13,000 in a month. So I spent like probably 6,000-7,000 on average. But that's the thing I found out. When at least the people I knew who own mathnasiums, they didn't market that much. They complain, oh, I can't market. I pay 3,000, 4,000 a month for rent. I can't afford to spend another 4,000 marketing. But I was like, you got to tell people you're there. You can't just have a storefront and not let anybody know you're there. You have to market. But the thing I'm most proud of, like my payroll was 1.2 million. And owning a business, you kind of really respect people who create jobs. like when people shit on like Jeff Bezos, oh, he's a billionaire and he goes to the moon, but his company employs 1 million people, I think. Like, that's a great thing if you can employ people and give them that, let them kind of support themselves and their family, and allow them to pay taxes and contribute. So I think that's great. That's what you need. You need more people to create jobs. That's how economies grow. Yeah, so maybe one of my subs, maybe we can do something, maybe another business or another idea, because now
We'll start some
just making videos all day.
Hey, cool story. Thanks for sharing. That was cool.
Yeah, I was gonna make a video explaining it, but I thought it'd be better on a live stream. How much tax planning strategy do you use when investing? I have a pretty simple strategy. I just don't sell it within a year. I mean, obviously, sometimes I do, because if I'm really concerned about a stock, I'm willing to take a loss, or even if I'm profitable and I'm not sure about the future, I'll sell. But I generally keep a year, so I could pay short-term capital gains instead of long-term capital gains and save a lot of money. But tax planning, yeah, I don't think many people think about that. But I think it's important. But that's like when you invest in REITs and master limited partnerships, all the dividends are taxed at the short-term capital gains rate, the higher rate. So even if you were, I did a video on this, explaining taxes, dividend taxes, I think it's called. So if you have a REIT that pays 5%, and say you own, like, I don't know, AT&T that pays 4%, after taxes, you'll probably make more money on AT&T, because after 3 months, all the dividends are taxed on the long-term capital gains rate, the lower rate. So if your tax rate is, say, 30%, if you owned a REIT or like an Energy Transfer, I think they're an MLP. What's the short-term capital gains rate? So say it's at 15%, you're at 15%. It depends how much money you make, obviously. It's pretty identical. I mean, you have to get your tax rate, but it's just something to consider. I'm not saying avoid REITs or avoid MLPs, but it's just good to know, because but if you're getting like a 10% yield, not many stocks can do that in the long term, but it probably doesn't matter the tax rate at that point. I'm long AT. As if it's passive income. It's like a W2 employee saying their return. I know it wasn't. I mean, it wasn't fair to call it a 20x. Yeah, I did say, like, it's not like I sat back and did nothing. But that's what my best investment was. It was an investment to buy a business. I guess. What about return on capital and QBI deductions? Would that make MLPs more tax advantaged? I don't know what QBI is. Mark, what is QBI? Do you know what that means?
Nope. You're the business major.
I know what I know what return on capital is. I'm not. If you, I forgot. If you have MLPs in a retirement account, I think you're still taxed at the long. I think you're still taxed on MLPs. Qualified business income. Oh, I don't know. I can't even remember what the question was.
Well,
Wouldn't that make
QBI, right? Oh. What about return on capital and QBI deductions? Wouldn't that make MLPs more tax advantaged? So QBI is the net amount of qualified items of income, gain, deduction, and loss from any qualified trade or business. So I guess it's loss deductions.
But you don't. There's no. Oh, okay. I don't know. I have to. I see where you're going with that. I'm not too sure. I try to provide a high level, but when you get into the granular, it could get a little more. Yeah. Yeah, exactly, JD. That's what I was trying to say. Is like I could have taken a job and made like 100,000 a year or something, but I did something different. And even if I got a job, I mean, I made like 200 a year with this business, and but regardless of that, I had an asset at the end of that I sold for nearly $500,000. You couldn't do that with a job. You don't have an asset to sell. Anyways, okay. Well, this is longer than usual. Usually we go to 90 minutes. But yeah, I'm going to learn more about NLP so I can answer that question better next time. Yeah, Mark, I think thanks a lot for joining.
Sure, it was fun.
I think I don't think we talked as much about shipping as I thought we would,
okay.
but everybody, if you want to learn about shipping, and you can apply it when you learn it. The thing is, when you learn about something, it's all like intertwined. Like, so if you go to his channel and learn about the shipping industry, you can apply it to a lot of other things.
Yeah, shipping, commodities, all of that stuff. You're interested in any of that, it's all intertwined.
Michael Berry wrote a short piece on taxes a while back. Basically, he ignores it.
Yeah, that's kind of how I think. It's just the price of doing business. It's just taxes are taxes, That's how I see it.
Yeah. I mean, I don't totally ignore it, but in a sense, I see where he's coming from. My only thing is I try to avoid selling within a year. That's the only thing I really think about. And that's usually not a problem because I usually buy stocks and hold it for a lot longer than a year. Shipping sounds really unattractive. It's so.
It sounds unattractive until you make a ton of money. Let's say that.
Now, not that I meant it sounds when you look at like how some of these companies have performed, their stock price, it just seems like they never make money. But like he said, it's cyclical. If you catch it at the right time, it's kind of like playing options. So same thing.
I think there's a lot of opportunity in the next 10 or so years in shipping.
It's at a real low point.
The stock charts aren't going to look like that. The cycles in shipping are really long. That's why it makes it really exciting to me.
Yeah, Mark, let me know how many
Yeah.
subs you get the next day or two.
Okay.
Um,
Yeah, what Matt Hansen says, that book, it's a really good book to get interested in shipping. The Shipping Man. It's like a novel. Describes the whole shipping game.
you mean P&L for the business or P&L for my stocks? I bought Costamare stock last year, but I had no idea what I was doing. Sometimes you don't really need to know what you're doing. I think the best investor is the one who knows nothing and just puts it all into S&P 500. They'll probably do better than most of us who are trying to like find the next Tesla. I don't know. It's hard to tell because right now, I mean, I guess I'm up now, even though the market has been coming down. But like, I sold a lot of my stocks, well, except my retirement fund, right before I started the business. So I didn't want to take a loan, and then I sold all my stocks right before the market crashed, which I thought was a genius, but it came right back up the market. Let me see if
I think I think Berkshire has beat the S&P over the lifetime. But I think the S&P beat them over the last 10 or so years, yeah.
yeah. My Berkshire stock is one of my worst stocks. It's performing worse than S&P. The only stocks that are beating S&P that I have are like Facebook and Apple. All the others are not beating the S&P. I would have made more money just putting it all into S&P probably. It's safer. I can't find. Oh, I think I know where it is. I'm trying to look for
I like that one, Computer Dynamo. You got to factor in the Geico discount, man.
yeah, I'll show you my yeah, so yeah, it's hard to see my P&L because it's not like I put money in and don't touch it for 10 years. That would be easy, but there's so much movement in and out, and so I was aggressively trying to pay off my mortgage. So I was using a lot of my. So you can see in January I put 80,000, February 90,000, March 100,000. So I sold all my stock right before the crash. I sold almost all my. Then 40,000 in May, 75,000 September. So that's what. But how many subs would you have if every video was about buying S&P 500? That's a good point. None. But it's fun learning about the market and trying to find the next big stock. Yeah, I think we'll call it a night, right?
All right. Have a good night. We done?
Okay. Yeah. Thanks a lot. Wait 1 second, Mark.
Sure.
Okay, everybody. I'll see you later. Thanks for coming.
Have a good day.